Of course, for us, new markets are new opportunities. So it's a new chance, it's a new revenue.
Bain & Company predict the luxury market, now worth 153 billion euros, will grow by 1% this year and see 8% growth by 2012 on the back of a global economic recovery. But whatever the demand for luxury goods and services, the demand for places on this particular polo field remains undiminished. And this year, thanks to a narrow 7-6 victory over newcomers Maserati, it was Brioni that bagged the third-place trophy.
And we've been robbed the first two games. We lost on golden goal, but it was great fun. It's playing on snow for the first time. We had a great time.
As for the final, Cartier defeated Bank Julius Baer 4-3, rolling home a penalty in the last 8 seconds.
There it is, ladies and gentlemen!
The team in red worthy winners of what had been a spellbinding tournament.
I had a fantastic time. I'm seriously considering coming back.
It's a great experience, and as long as I keep getting asked, I'll keep coming.
And why wouldn't you? Because whether you're drawn by the socializing or the sport, it's unlikely the experience of high-altitude polo on ice will ever leave you cold.
And that's it for this week's World Business. Thanks for watching. We'll see you again at the same time next week.
This is NDTV, and you're watching NDTV Profit.
It's not mere accidental coincidence. Every time we try and hold a summit like this, the market falls. Okay, and we love it because, I mean, it's very good to have a meeting on that day. Nilesh, just to start with you. Now, we heard about troubled markets all the way for the last 1.5 to 2 years. It gave us hope in between in terms of recovering to a greater extent. But now, in the last 2 weeks or 3 weeks, there are new stories. It looks like re-looking at the world map, which are the countries which have got problems. I just want you to give me a brief on what's happening in that part of the world and how it is impacting.
So globally, if I have to summarize in a simple manner, there were a lot of excesses. Those excesses created problems. The central bankers and the government ensured that the world doesn't go into deep recession like 1929. They survived the patient, but there are a lot of after effects of those things. And slowly and steadily, the patient will recover and move to general ward, but there will be enough hiccups in between. And those hiccups will continue to keep on coming up in various forms. And because people are bruised, because people have scared memories of Lehman Brothers collapse, every time such hiccup occurs, they feel frightened, they take decisive action, they sell equities, they sell risk, they move into safety of fixed income products. But eventually things will stabilize. From an Indian context, Dubai was a $70 billion economy. So a small tiny boy fell down. One day we remembered, second day we forgot. Greece is $350 billion economy. A slightly matured person fell down. We'll suffer probably for 10-12 days and then we'll forget about it. Spain is a $1.2 trillion gorilla. If it falls, we'll suffer for 30-40 days and then we'll forget about it. At the end of the day, this problems, these issues will only create correction in the market which will last for a while.
Anup, we all know that the global currency interest rates are at the lowest for many, I think probably for many decades it's at the lowest. Given that scenario, there is a lot of money which is coming, which is borrowing in those currencies and investing in in India, which is like obviously like, it's like a carry trade, which is giving them the kind of returns which they are looking at. I hear like in the last I think few weeks, a lot of money is getting pulled out of exchange traded funds. And I also want to know from you, what is the kind of impact the foreign money which will have on Indian markets, and what is that we have seen in the last few weeks, and how do you think the situation will play out in the next 4 to 5 years?
4 or 5 years is difficult to sort of say, but I must say that all foreign monies, while they are clubbed into one kind, they are not of all kinds. So they are of different shapes and sizes and kinds. So that is first thing we must realize. For example, ETF, and that is the latest which is going on. Essentially what is happening on the ETF front is that most of the ETFs are passive investment. If you want to take a country exposure, you just buy the index of that country. You don't go stock specific. The second thing on there, from the risk management perspective, most of them have exposure limits based on volatility and other things. So what happens is the moment the volatility of a country starts to move up, like it has happened in the last 7-10 days, more stop losses get triggered because you have to reduce the exposure on that country. So that further sharpens the movement. Now the good thing is that, we also have a lot of sort of long only funds inflows. Now the good thing about that kind of fund is that you have to stay invested because that is the mandate given. And if you have to stay invested, and if India, China, and these are the countries where there is growth. Actually, if you see, suppose you are a big pension fund manager there, and you have to do a certain targeted return to meet the retirement benefits. And even in an Excel, if you just draw, and you see that, how do you get the weighted average of the growth? Because ultimately it will start to mirror the growth. You cannot escape the fact that you have to start to invest into economies which have high growth rate, and hence India clearly comes among the top 2-3. So actually, even from an Excel spreadsheet basis, you have no choice for long only funds to come here. You have ETFs which are there, which move in a different manner. Then you have hedge funds, which is a third kind of an animal. So I would say that as we move further, and as the risk perception of India improves, more and more ETFs will come, and more long funds will come. That will tend to give more stability to the Indian markets than otherwise. However, what happens is that when they move out, they have to move out very sharply, and that creates the volatility.
Correct.
Because if it gets also in these days, the domestic institutions also this year will have to buy around 45-50,000 crore worth of equities. So actually, it is not the same as what it was 3-4 years back, where FII was driving the full market. Now domestic institutions also put a counterbalancing force. Now from the volatility perspective, what happens is that domestic institutions don't chase the price, but FIIs have to chase the price because stop losses get triggered. So what happens is that while you will see that the net buy and net sale are the same, if they start to sell, the volatility on the downside is high and the volatility on the upside also is high if they want to buy and sell. So these are the various dynamics moving depending on, what is the flavor of that time the markets move.
Thanks, Anup. Ved, I think coming to you, I'm sure you would be the most sought after personality in Delhi and real estate. But I think before we get into that specific subject, your friends have got problems everywhere in the globe. In Dubai, I'm sure every country, but I just want to limit my question to this one, which is how much is of this FDI and foreign money, which is actually impacting our local real estate development?
Some basic numbers, if we look at, the number of houses required in our country are increasing versus the supply. Some of the cities, there is huge supply coming, but that's not all the case. So, if you see the basic housing demand, it used to be 20 million houses more are needed. Now that number has moved somewhere close to 22. We have gone through a little bit of down cycle. We were nervous when there was a global turmoil. Housing has stopped. Most of the city residential market has turned very sharply. Bombay is exception, which is abnormal. It has gone higher than the previous one also. So Indian market, the demand supply gap is huge. For next 5 to 10 years, the demand supply gap is not going to fill up. So talking about housing bubble or any correction is a far away. If you just look at the people who take mortgage, the ratio in our GDP is less than 5%. and a developed market, the ratio is 65 to 85%. If you take some of the country like UK, most of the people you will find in their daily life, mortgage starts at the very early age. The concept in life, when they discuss, one thing they discuss about the weather, and the second, what is your mortgage, which bank. So mortgage is an everyday part of life. Here it is not the case. Some people have taken. What we see around us is urban population or people around us. So you will find in age group from 25 to 40, most of the people who are working in metro cities would have taken avail a housing loan. But all of us will represent 5% of India, maybe less. So you will find when you go one step lower in any city, people have not taken housing loan. So they must take housing loan, and then problem should become one should have a first house, second house and third house. So problem is far, far away. Second, some of you who have gone through housing loan process, it's still a very tedious process. Nobody gives you on the internet, just fill some application and money get transferred to your bank or goes to, it doesn't happen. Whatever mechanism, still somebody comes and wants to look physically where is the facility. And they give you housing loan based on your return capacity or paying capacity, never based on the housing value. Most of the world gives you money based on the housing value. They never look at your paying capacity. So we are far, far away from that situation. So in a way, it's a blessing in disguise. Our markets are not so transparent, so paper driven. Only stock market where you can do trading on the net. There is no mechanism in India in real estate whereby you can buy and sell houses like you do shares. So because of this reason, our sector is still very much away from getting any kind of toxic.
Brought to you by ICICI Bank Wealth Management. Media partners.
The biggest experts on taxes, country's most authoritative voices.
We will have to tax all transactions. The question is how we go about that.
Join me, Mukesh Bhutani, on Budget 2010 to see the impact on your taxes.
SR presents Your Taxes, Monday to Thursday at 7:30 p.m. only on NDTV Profit. Your Taxes is presented by SR. Let's begin. In association with the Vista Aura Plus, now with ABS and dual airbags. LIC of India. And Aditya Birla Group. Let's reach for the sun.
अरे सुन, वैसे तो मैं 3-4 दिन में आ जाऊंगा। ये कुछ पैसे आज ही नेहा को देने थे, याद से दे दी।
हाँ, चिंता मत कर, भाभी जी को दे दूंगा मैं। अगर तू महीने भर के बाद वापस आ,
चिंता मत कर, ज्यादा मत सोच।
सुन यार, अगर तू लौटा ही नहीं तो
देख यार, मैं तेरे को कह रहा हूँ,
तेरी फैमिली की जिंदगी भर के लिए इतने पैसे काफी होंगे क्या? सर झुका के क्यों बैठा है यार? आगे की सोच, सर उठा के जी।
लाइफ इंश्योरेंस प्लान्स फ्रॉम HDFC स्टैंडर्ड लाइफ। जो कल की सोचते हैं वो सर उठा के जीते हैं। सर उठा के जियो।
पेपर कैसे बचाएं? आइडिया।
अरे हो गई रिकॉर्डिंग भैया?
हाँ हो गई सर, हो गई।
चल MMS भेज। भाइयों और बहनों, बाकी सबको छोड़ दो एंड हमको वोट दो।
कॉलेज का फर्स्ट डे, सही इंप्रेशन जमाना इम्पोर्टेंट है। ये ट्राई कर दीदी। हाँ नाइस।
थोड़ी और की उम्मीद अपनों से ही की जाती है, इसीलिए आपको मिलता है सेविंग्स अकाउंट हर एक की जरूरत के लिए। फ्री ATM डेबिट कार्ड, SMS अलर्ट्स और इंटरनेट बैंकिंग। कैनरा बैंक, टुगेदर वी कैन।
इस दिन का सबसे सुहाना पल कौन सा है?